Hello everybody, welcome to Boss Blunt's Think Tank. Today we're going to discuss massive tech layoffs, cryptocurrency hedge funds and lenders going bankrupt and being liquidated. We're going to discuss currency swaps and the way that they're used to prop up the S&P 500 and failures to deliver on our favorite stocks and favorite meme stocks. Sit down, strap in, buckle up. We're going for a ride. We're going to take a couple minutes here just to give everyone a chance. Hi, everybody. It's great to see you. Hi, Curtis, Fresh Baked, Big Ace, Britt, J-Dog, hanging out here today with everybody in the think tank. It's good to have you and to be here together with everybody. As you can see, we're going to the dark side of the moon, ladies and gentlemen. It's going to be a fun one. $25,500 people were laid off this month by big tech companies alone.
I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. I'ma get a scholarship to King's College. I probably shouldn't brag, but dag, I'm amazed and astonished. The problem is I got a lot of brains, but no polish. I gotta holler just to be heard with every word. I drop knowledge. I'm a diamond in the rough, a shining piece of coal, trying to reach my goal. My power of speech, unimpeachable. Only 19, but my mind is older. These New York City streets get colder. I shoulder every burden, every disadvantage I've learned to manage. I don't have a gun to brandish. I walk these streets famished. The plan is to fan this spark into a flame. But damn, it's getting dark, so let me spell out the name.
Hey boss, guess what started happening when you decided to go live now? When you started to go live now? Fire started to go down.
Surprise, surprise.
Let's fucking go.
Don't be shocked when your history book mentions me. I will lay down my life if it sets us free eventually.
Let's fucking go, DAs.
Thank you, Barney. You're too kind, my friend. You are too kind. Thank you for your support of the think tank. Thank you, Veronica. Appreciate you as well. Iron Grappler, welcome, my friend.
The unrest in France will lead to anarchy. Anarchy, how you say? I use anarchy. When I try to make the other side panicky with my
yo, I'm a tailor's apprentice, and I got y'all knuckleheads and local parentis. I'm joining up rebellion, cause I know it's my chance to socially advance. Instead of sewing some pants, I'm gonna take shots. And but we'll never be truly free until those in bondage have the same rights as you and me. You and I do or die. Wait till I sally in on a stallion with the first black battalion. Never another shot. Geniuses, lower your voices. You keep out of trouble and you double your choices. I'm with you, but the situation is fraught. You got to be carefully taught. If you talk, you're gonna get shot.
Bird, check what we got. Mr. Lafayette, hard rock like Lancelot. I think your pants look hot. Lawrence, I like you a lot. Let's hatch a plot blacker than the kettle calling the pot. What are the odds of God to
Time to bring the information to the people.
Give me a position, show me where the ammunition is. Oh, am I talking too loud? Sometimes I get overexcited, shoot off at the mouth. I never had a group of friends before. I promise that I'll make y'all proud.
Let's get this guy in front of a crowd.
I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot. I am not throwing away my shot. I am not throwing away my shot. Hey, yo, I'm just like my country. I'm young, scrappy, and hungry, and I'm not throwing away my shot.
Everybody sing, whoa, 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 hey, whoa, whoa, whoa. Say, let 'em hear you. Let's go. Whoa, whoa, whoa. I said, shout it to the rooftop. Whoa, sit to the rooftop. Whoa, oh, come on, come on, let's go. Rise up when you're living on your knees. You rise up. Tell your brother that he's gotta rise up. Tell your sister that she's gotta rise up. When are these colonies gonna rise up? When are these
Cheers.
Cheers, baby.
memory. When's it gonna get me? In my sleep, 7 feet ahead of me. If I see it coming, do I run or do I let it be? Is it like a beat without a melody? See, I never thought I'd live past 20. Where I come from, some get half as many. Ask anybody how we live it fast and we laugh, reach for a blast. We have to make this moment last. That's plenty. Scratch that. This is not a moment. It's the movement where all the hungriest brothers with something to prove went. Foes oppose us. We take an honest stand. We roll like Moses, claiming our promised land. And if we win our independence, is that a guarantee of freedom for our descendants? Or will the blood we shed begin an endless cycle of vengeance and death with no defendants? I know the action in the street is exciting, but Jesus, between all the bleeding and fighting, I've been reading and writing. We need to handle our financial situation. Are we a nation of states? What's the state of our nation? I'm past patiently waiting, I'm passionately smashing every expectation, every action's an act of creation. I'm laughing in the face of casualties of sorrow. For the first time I'm thinking past tomorrow. And I am not throwing away my shot. I am not throwing away my shot. Hey yo, I'm just like my country, I'm young, scrappy, and hungry, and I'm not throwing away my shot. We gonna rise up, time to take a shot. We gonna rise up, time to take a shot. We gonna rise up, rise up. It's time to take a shot. Rise up, rise up. It's time to take a shot. Rise up. It's time to take a shot. Rise up. Take a shot, shot, shot. Hey yo, it's time to take a shot. Time to take a shot. And I am not throwing away my shot.
Not throwing away my shot. Ladies and gentlemen, Bitcoin is broken below 19,000. I would like to thank Grandpa Barney and Eric Vizcarra. Both, thank you very much for your support of the think tank. Looks like Eric says he went from Webull to TD Ameritrade. Took him 5 minutes. No more dark pools. They just give money to Citadel. IEX direct routing only. All right, I like that, man. Good for you. I'm proud of you. Time to get away from those PFOF and dark pool abusers, right? That's the #1 enemy of retail investors, in my opinion. Grandpa Barney, no, brother, you're the rock star. Thank you for your support, as always, of this community. I see you everywhere, and I absolutely love your positivity, so thank you for that. Much appreciation goes out to you as well. As I was just showing you guys through our little introduction here, the month of June has seen over 25,500 layoffs. 25,500 people just in the tech center losing their jobs. Bright Machines, Baiju's, Huobi, crypto marketplaces, Bitpanda, IronNet, Aura, even Tesla laying off 3,500 people. Three Arrow Capital is a hedge fund, like amongst many others, that has been extremely, extremely overleveraged. That being said, now you're seeing companies, a lot more companies, including Celsius, which has paused withdrawals as of June 12th and has not re-enabled them, is basically under custody. $11.8 billion in crypto under custody through this lender is facing possible insolvency. Three Arrows Capital, the hedge fund, they've already faced $400 million in liquidations, and there has been a court-appointed liquidator in order to sell off the remaining Three Arrows Capital assets. Celsius, BlockFi, all these guys have major exposure to Three Arrows Capital in these liquidations as well. BlockFi attained a revolving credit line of $250 million from Alameda Research. The current reports that BlockFi is being sold for pennies on the dollar supposedly is inaccurate and incorrect. Genesis, they claim that as of June 17th, they sold or hedged all liquid collateral on hand, losses to be netted against their balance sheet. We'll see how that pans out. Nexo is another crypto lender. They have almost $5 billion in debt obligations, and they claim to have no exposure to 3AC. BitMEX has a $6 million exposure. FinBlocks, another crypto yield platform, has limited withdrawals from their customers to $500 per day with a maximum of $1,500 a month. So if you've got any substantial amount of money in FinBlocks, you're not able to get it out. Same thing with Celsius and a lot of these other cats, completely paused withdrawals. Babel Finance, they have a $3 billion loan, and they've suspended withdrawals. Pending preliminary agreements with counterparties are active, but they're still preliminary agreements, and that's as of June 20th. Orthogonal Trading, another crypto hedge fund, has a $10 million loan exposure to Babel Finance, which has billions of dollars in loans as well. Maple Finance is another crypto lender, which has $10 million invested in an orthogonal trading pool in the USDC pool. Voyager Capital, one of the largest brokers of crypto, has a $720 million loan exposure in between Bitcoin and USD to Three Arrow Capital. They have a daily withdrawal limit, which has recently been reduced to $10,000 a day, and they've attained credit lines from Alameda Research of $500 million through 2024 at 5% interest in an attempt to maintain liquidity and the ability for people to make withdrawals.
What a shit show.
It was maybe spit out my drink, bro. Yeah, it's a total shit show. Yeah, let's say just move my screen over a little bit. Let me share this with you guys. Cash Money and who else? CoinFlex. CoinFlex has now paused withdrawals. So the weakest crypto entities that we're seeing, those with high leverage and low capital, are obviously facing the worst challenges. The ones with stronger balance sheets, they seem to be more likely to survive. That's why you've got companies like FTX out there talking about purchases of other companies. However, the purchase of BlockFi, if that's who by FTX, doesn't seem to be accurate. Just so everybody knows, because I know that's going all over Twitter right now, and that's not the facts. The SEC has rejected Grayscale's application to convert its Grayscale Bitcoin Trust to an ETF late Wednesday, citing concerns about market manipulation, the role of Tether in the broader Bitcoin ecosystem, and the lack of surveillance sharing agreements between the regulated markets and regulated exchanges. In billions as of June 22nd through June 29th of this year, we're looking at around $4.5 billion in venture capitalist crypto funding in the month of June. The month of June is still wrapping up technically as of today. This is absolute insanity. Massive amounts of layoffs all across the tech industry. Cryptocurrencies, brokers, stable coins, exchanges, lenders, all facing liquidation. Bitcoin at currently right at or below the $19,000 mark. And for those of you that are unaware, the reason that the stock market looks so strong at times and doesn't want to fail is because of currency swaps. And you can see a swap in action. Basically, the US dollar being swapped out for the Canadian dollar. And it destroys the volatility index, causing a massive pump. Check this out. This is the moment the swaps actually occur. This is crude in white. The DXY is in green. And the Russian ruble, the 10-year and the 20-year Russian bonds, I meant to say. Massive currency swap here between the US dollar and the Canadian dollar. This is Russian 15-year, 20-year, 10-year, 1-year bonds, all being pushed down as oil and crude, the triple Qs, all shoot up. And when there's a swap, there's a reverse swap afterwards, meaning they obviously reverse. But that takes a while before the reversing. Sometimes it could be a matter of minutes, sometimes it could be days. My man over here, Frank Oz, Expound the Profound on Twitter, posted some exceptionally good points. The US dollar is drained to Canadian swap. The USD is drained. It drains the VIX, and the stocks explode higher. Plain and simple. The Fed is worried about the volatility index going up and rates. Take a look at the volatility here when the swap occurs, and then Turkey. Huge jumps. Other countries need to maintain their currency values low in order to bring cheap imports to the United States. This is where I want to be here. The last time we saw the Feds do a 75 basis point hike and the stock market went up, it wasn't because investors such as you and I bought the dip. It was because a swap occurred, a currency swap here, which caused the blue line, the triple Q, Tesla, and the yellow line, the US dollar, the Japanese yen, to swap, to do absolute flips. And when they do this, eventually they undo it. But that was a midday swap to make it look like the stock market is not facing liquidity concerns. We know that the stock market's facing immense liquidity concerns because today was another, oh shit, hold on. Today was another all-time high on the reverse repurchase program. $108 counterparties, 108 banks and their holding companies received massive amounts of bailouts in today's overnight reverse repo bailout. $2,330 billion. Yeah, $2,330 billion at 1.55% APR. Today's the last day of the quarter, June 30th, 2022, and the last day of the month, meaning that these banks had to cook their books. Tomorrow, you will see this number drop to under 98 or 97 counterparties, and it'll probably be around $2.15, $2.2 trillion. Something important that we need to talk about. FINRA. Yes, ladies and gentlemen, FINRA is asking for comment. FINRA says, we are requesting comment on a proposal to establish new trade reporting requirements for over-the-counter transactions. Nobody really is sharing this. This was posted at 10 o'clock this morning. My only response to FINRA is that all trades should be reported within 24 hours. Period. The only reason to allow T+2 reporting and T+35 reporting is because FINRA is complicit with the bad actors in the markets that are propping up and manipulating equities and bonds and cryptocurrencies of all kinds. Enough is enough, and we demand better. Ken Griffin has proven to us that he can lie to Congress and get away with it. Maxine Waters don't mean shit to Ken Griffin. United States Congress doesn't mean shit to Ken Griffin. The laws of the United States of America don't mean shit to Kenneth Cordell Bedpost Griffin. This man can get away with practically anything he wants, including manipulating stock markets and over-leveraging his hedge fund to the tune of $65 billion in shorts sold, not yet purchased. Reportedly. We don't know the actual numbers because we know that they've been fined by FINRA many, many times for literally cooking the books, marking shorts as long wrongfully, misreporting short positions, rehypothecating shares, creating synthetic shares in the name of liquidity, marrying puts with calls in an attempt to prevent themselves from having to delta hedge, and not delta hedging whatsoever, because the DTC's margin calls don't mean shit to Ken Griffin. Our financial system is a joke. Congress is a joke. And Ken Griffin shits all over them at any moment in time that he pleases. The only way this will change is if this scumbag actually sees trial. Bernie Madoff's partners turned him in to the SEC and they did nothing. Bernie Madoff's children turned him in to the SEC and they did nothing. They did nothing until Bernie Madoff turned himself in because he had no more money with which to continue his Ponzi scheme. Kenneth Griffin is not going to turn himself in. The Department of Justice doesn't mean shit to Ken Griffin. Do me a favor. Somebody clip this and tag this in the Congress, in the Department of Justice, and Maxine Waters. Because Kenneth Griffin lies to you under oath, and you don't do shit. Kenneth Griffin donated $50 million plus to Robert Irvine for the governor, running for governor of Chicago. I think you believe he was the former mayor, or is the mayor of Aurora, Illinois. And he lost. So now Kenny G is out $50 million plus in campaign contributions. Aurora Mayor Richard Irvine forced the purchase and installation of high-frequency tower satellite installations by strong-arming the board of the village of Aurora, Illinois, into doing Kenneth Griffin's bidding. The only company that uses that high-frequency tower owned by Scientel, that motherfucker right there, Kenneth Griffin's company, Citadel Securities. Ladies and gentlemen, the system has failed us, utterly and plainly and simply. Banks are receiving billions of dollars in bailouts every fucking day and growing. 108 counterparties today traded $2.3 trillion worth of worthless United States treasuries in exchange for some of their money and received it back with interest the following day. If buying and holding a stock breaks the system, then maybe the system was broken in the first place. All retail did and has done is buy and hold calls and shares. And if that's enough to break the system because the liquidity fairy is creating billions and billions of synthetics and shorts marked as long, rehypothecations and naked shorts, we didn't cause that problem. We are the cure to the problem. What the fuck do you think about that, Cash?
They wanna be so goddamn weird.
By executive order of the motherfucking President of the United States of America and by President Xi Jinping of China. Take a look at the failures to deliver for June 3rd, 2022. These are the AMC failures to deliver on June 3rd, 2022, the same date the implementation of Executive Order 13959 as amended came into effect. There was 2,653,787 failures to deliver. That was an increase in 1 day increase of 1,703,178 failures to deliver. Have I made my point?
Damn, Powell need to dust off the third money printer, I think.
Yeah. On June 6th, there was 1.728 million. And June 7th, 1.122. What happened on June 6th? The implementation of the SFT program, the NSCC 2022-003 pawn shop rule. Because the pawn shop SFT regulations program was implemented on 6/6, it allowed them to start using some of those borrowed shares to borrow against their bad bets. That's why there's 180 million shares of AMC on loan right now. Because they're borrowing them at a very high cost to borrow to maintain their shitty short bets and margin requirements on meme stocks like AMC and GameStop and BBIG. That's why the cost to borrow on AMC went up to 80%, and recently, as of the Russell 2000 and 1000 reconstitution, has come down slightly. The price of AMC went up because the Russell 1000 reconstitution or addition forced the purchase of some derivatives, such as call contracts and ISDA contracts and futures and swaps and shares, to as exposure to companies like BlackRock and such for their ETFs to get everything sorted out and get shares that they needed for AMC. That caused the price to increase. And then because of all the shares that were in the Russell 2000 that were no longer needed, I believe that gave them a good opportunity to return hundreds of thousands of shares of AMC and GameStop. Sorry, not GameStop, AMC, because it moved from the Russell 2000 to the 1000, whereas GameStop moved from the 1000 value to the 1000, was included in the 1000 value and the 1000 growth. Bullish on both. But the return of the AMC shares from the Russell 2000 sale and that were no longer needed, that allowed for a reduction in the cost to borrow in the short term. Over the following days, as the SFT program is still being used and abused, we're going to see the cost to borrow of AMC increase again, just like we're seeing the cost to borrow of BBIG now in the hundreds of percentages. Thanks to Jackson Hunter as well for pointing out the AMC FTDs for the first half of June have been released. 2.6 million on June 3rd alone, just like we stated. 2,653,787 failures to deliver. That's $35.295 million worth of failures to deliver. And the delivery date on that is July 8th. July 8th, they've got to deliver on these shares. That means the cost to borrow is going to increase. And if equities continue to lose value, margin will call. Because the DTC may be able to hold back margin calls, but the banks are a lot more greedy. The banks around the world are not going to care if the DTC withholds a $9.7 billion margin call. The banks are going to call up their hedge funds and they're going to say, we want our fucking money. I'm extremely bullish on the coming weeks. The new CAT system is coming into play. FINRA is requesting comments on proposed trade reporting requirements for over-the-counter options contracts. Comment period expires September 20th, 2022, right around the same date as the date that the central bank digital coin information is going to need to be released. So I think that's not accidental. I think that's very coincidental. So we can email comments here. And I'm going to put this in the chat so that everybody can email their comments. And if you'd like, you can say pretty much what I said. And that's that we have the technology to have failures to deliver reported immediately. We have the technology to have short positions reported the same day. Make it happen. Be respectful. Don't be disrespectful. Try not to swear. Try not to curse. It won't help. It's not going to help us in general. This is a call to action for everybody to contact FINRA and to let them know how you feel. Everything, including OTC pink sheet bullshit, should be reported within 24 hours. We have the fucking technology. This deserves a share because the June 3rd implementation of the Executive Order 13959 as amended caused $35 million worth jump of FTDs that have to be delivered by July 8th. If they're not, well, it just gets pushed down a little bit further. So we do have to see some sort of movements here. There are a lot of ways for these guys to use and abuse and hide them with these ISDA contracts and swaps. And there's a way to turn failures to deliver into the market makers and just kind of have them washed away. We need these to be reported immediately, and everybody needs to comment. Send comments to this regulatory notices for FINRA. I've dropped it multiple times into the chat. Thank you, everybody. Tony Taku, you're too kind, my friend. Jaina, Larry Lewis, Aaron, appreciate your support of the think tank, my friend. We're going to continue to try to bring you all the best information we absolutely possibly can. I'm going to go ahead and retweet this. You guys can find it on @BossBlunts1 on Twitter if you want as well. It's in the comments there if you're able to find it now, or you can go get it from my Twitter later if you want to find it. But do it. Make sure you go out and you comment to FINRA and let them know what they're doing is criminal, that we don't want them to be complicit in the allowing of the misreporting of data and the abusing of positions. Because that's our money, that they're taking money and using our money against us. Dr. Michael J. Burry says, adjusted for inflation, 2022, first half S&P 500 is down 25 to 26%. And the NASDAQ is down 34 to 35%. Bitcoin is down 64 to 65%. Where's Johnny fucking Bravo? Holy shit.
Cue the fire.
There he is. That was multiple compression. Next up, earnings compression. We're not even halfway there, ladies and gentlemen. I've been telling you this for a long time. This market has barely started to get the correction going. That's my opinion. And I'm not a financial advisor, but I have a feeling within a matter of a few months, people are going to be going, holy shit, he was right. And I don't even want to be right, but it's an inevitability. You want to know why? Because the banks are over-leveraged in a way that is out of fucking control. Second quarter trading revenue for 2022 was down 22.9%. 22.9% trading revenue reduction in the second quarter of 2022 for these fucking banks. In the quarterly report on bank trading and derivatives activities, the Office of the Comptroller of the Currency of the United States of America noted that trading revenue in the second quarter of 2021 decreased. I'm sorry, I'm looking at 2021. My fault. I'll move over to the newest one. Decreased by 40.9%. Sorry, I misspoke. There's so many of these publications. Let me just click on the right one. The information was correct. I just meant that was actually from 1 year ago. And you're going to find that that's a continuing trend. It's also down this year as it was the quarter before and the quarter before and the quarter before. Ever since the bailout or the quantitative easing has stopped. Okay, I'm sorry. Here you go. Cumulative trading revenue of the United States Commercial Banks and Savings Association was $10.6 billion in the first quarter of 2022. First quarter trading revenue was $3.4 billion, which was 47.8% more than in the previous quarter and $10 million or 0.1% more than the first quarter of 2021. That's interesting, huh? First quarter trading revenue was up 47.8%. Excuse me one second. First quarter trading revenue 2022 was $3.4 billion. But that doesn't make sense because that's not 47.8% more than in the previous quarter. Something about that strikes me as incorrect. 4 banks hold 89% of all the industry notional amount of derivatives. 89%. Percentage of centrally cleared derivative transactions increased to 43.4%. That's a good thing. Hopefully, it's because a lot of more people are trading on lit markets. But in reality, that's probably not what it is. In reality, it's the fact that when companies are being shorted, those shorts are run through lit exchanges and lit markets. Check this out. Take a quick deep dive into this report. Because you got to look at JP Morgan and see how massive the change is. I'm talking tens of trillions of dollars. This report was just released a few days ago, June 2022. I wish I could make this larger for you guys, significantly larger, but it's really not rendering well. Here you go, centrally cleared. All right, people, so you want to know how much is actually traded in dark pools? Well, take a look here at Forex, foreign exchange, fiat, things like that. 96% traded in the dark pool by JP Morgan Chase, 97% by Citibank, 98% by Bank of America. All dark pool trades. 100% of Wells Fargo and Morgan Stanley's fiat Forex trades are done in dark pools. How about interest rate products? That's a little bit higher. 42% for OTC, for dark pools for JP Morgan, 100% for Morgan Stanley, 72% for Goldman Sachs. Precious metals. 100% dark pool for JP Morgan Chase, HSBC, Goldman Sachs, and Wells Fargo. Shocking. Talk about price manipulation, right, Cash?
Oh, man.
Price suppression. This is why it's the everything bubble. It's not just AMC and GameStop, BBIG, and meme stocks that are going to go to the fucking moon. The reason that those stocks are more likely to go to the moon than any other meme stocks is because AMC shareholders, such as myself, there are over 4.1 million of us, and we own 90% of the actual float. And GameStop investors such as myself, about 25% of the float is locked in computer share alone, which computer share investors make up a tiny percentage of GameStop shareholders. That's the difference between AMC and GameStop and stocks like, say, Redbox, which is 70% owned by hedge funds. Precious metals, on the other hand, are owned by central banks and owned by governments worldwide. That's why it's traded 100%, 78%, 80%, 100% in dark pools, because of the price suppression that's occurring when JP Morgan leases silver, for example, to Bank of America, which you can see on the COMEX. And then you can see that Bank of America is not even taking physical delivery of that, but is using that lease to further short down the price of silver. They don't care if you own silver and gold, because the small amounts that we can amass with our small wealth is but a drop in the bucket to what it will be once the stock market and bond markets and real estate markets crash, and then the central bank digital coin comes along, links itself along with some of these precious metals, and the price of precious metals is allowed to properly be revealed through the trading of these over-the-counter derivatives on centrally cleared markets, lit markets, which won't happen till after this collapse that we discussed earlier is being this currently the stocks that we're currently trading, the S&P and everything, is being propped up through the use of naked shorts on the VIX and currency swaps and other kinds of swaps being committed by the New York Fed by way of the Plunge Protection Team and the Economic Stability Fund. Absolutely insane, the things that are allowed to happen on the markets. I've been trading for 18 years. I've known for a long time just how badly things are. But the more that I've researched over the last 18 months in AMC and GameStop and the rest of the meme stocks and precious metals and all the other bonds and everything, I have just come to learn that everything on the market has gotten to the point where it's so unsustainable that there's going to be a massive, inevitable crash to come that will make the likes of 2008 and 1929 seems like child's play. Look at the average 60-day value at risk for JP Morgan. Chase Bank has just shot up, skyrocketed in the first quarter of 2022, and even more so in the second quarter. Look at the VAR capital requirements for JP Morgan Chase Bank has shot up, skyrocketed. Why? Because they increased their amount of derivatives by about $18 trillion Q over Q for JP Morgan. Look at that. Precious metal contracts by maturity. It doesn't even fit on my fucking screen. Hold on. All right, let me just take my face off here. Okay, look. Why would precious metal contracts by maturity increase so greatly from 2001 in one quarter? Not just doubled, tripled, quadrupled, 6x'd easily from around 60 billion to almost 500 billion in one quarter of 2022 for precious metal contracts in under 1 year time frame. And then the blue one here is the 1 to 5 year length of these contracts. 463.17 billion in under 1 year contracts, up from 75 billion the quarter prior. This is pure suppression. They don't have anywhere near enough actual silver to deliver on everything in the COMEX alone, let alone all the actual physical silver required. And pretty soon, as you can see, they're loading up on these precious metals. Pretty soon after the market collapse, the precious metals is what's going to be backing the newer fiat. And it's not going to be a regular fiat. It's going to be the central bank digital coin. The government will control everything that you do, every dime that you spend. If you owe taxes, they're going to take it from you. They don't care if you need that money to feed your family. If you owe child support, they're going to take it from you. They don't care if you are going to get your car repossessed and you need to make a quick payment on it before you get your next check. None of that fucking matters. They will have complete and total control over all of the money that you have. The grand total notional value derivatives just for the banks and their holding companies for the top four is now not even their holding companies, just the top four banks, is $200 trillion. The top four is 178. The total banks, all the banks, is 200,000. Last quarter, the total notional was 177 trillion. This quarter, the first quarter of 2022, the next quarter, that went up to 200 trillion. That's an increase of 87.97, $23 trillion in derivatives, total notional value in one quarter. One quarter. And we've seen that in the past here, after 2008 and 2009. This leads us to believe that derivatives are being abused harder than ever to try to maintain the markets in the current sense. Trying to maintain markets where they are at the moment. When these banks lose their asset values and their equities lose value, then it will cause margin calls to cascade throughout the industry, not by the DTC, but by banks and holding companies internationally. There are over 1,300 of these banks that deal with these derivatives, and they will margin call each other when the time comes. And then those banks and prime brokers will margin call the hedge funds and retail investors and institutions beneath them. And then when those start to become insolvent, the DTC will continue onwards and margin call those hedge funds and market makers, which will cause the prime brokers to further margin call others. Meme stocks will eventually begin to make a decent run. Failures to deliver will have to be closed out, will have to be, delivered. And naked shorts during liquidations, for example, the way that 3 Arrow Capital is now being liquidated, and we're going to see other companies such as Celsius also likely be liquidated in the near future, maybe even Babbel, possibly a dozen others that I mentioned earlier in the stream.
Inevitable.
Inevitable. Fucking inevitable. And that's why I'm so carefree in this. Because I'm going to watch the world burn, whether I like it or not. So I might as well make sure I'm properly fucking hedged.
And rich as fuck.
And rich as fuck. The year-over-year percentage change in total BHC trading revenue is down 44.5%. Remember earlier when I told you guys that why the banks were up? The banks are up because they had to pull money from their holding companies overseas. Watch this. I will prove it to you in a heartbeat. The numbers are here. They're given to us by our federal government every fucking day. You just got to look. Bank trading revenue is a percentage of consolidated holding company. Before the 2008 financial crisis, trading revenue at banks typically ranged from 60 to 80% of their consolidated bank trading holding company trading revenue. Since the 2008 crisis and the adoption of bank charters by the former investment banks, the percentage of bank trading revenue to these BHCs has fallen and is now typically between 30 and 50%. This reflects the significant amount of trading activity by the former investment banks that remains outside insured commercial banks. What that means is they don't have to follow Dodd-Frank regulations outside the United States. Ain't that fucking grand? More generally, insured U.S. commercial banks and savings associations have more limited legal authorities than their holding companies. Bingo! Generally, insured U.S. commercial banks have more limited legal authorities than their holding companies. Insert editor's notes here, because Dodd-Frank regulations actually affect things here in the States, but not offshore, particularly in the trading commodity. In the first quarter of 2022, banks generated 70% of consolidated holding trading company revenue, an increase from 52.1% in the previous quarter. That means they're moving money back and forth between their holding companies and their banks. But because of the recent changes, they've had to move more money from offshore trading companies back here to their onshore United States banks in order to make sure that they can meet the margin requirements. Because of new regulations implemented by the DTC and the NSC, they are no longer able to rehypothecate the same assets from the parent company to the sub-parent, to the sub-company. This is great for all of us. It means that the noose is getting tighter around all these banks. So really, the total trading revenue change year over year is 0.1%, almost completely negligible. And considering the fact that they're receiving an overnight bailout every fucking day, it's a proof of the fact that the reverse repo and the SFT program is the only thing that is keeping these guys from being completely fucking bankrupt and insolvent. Eventually, when Three Arrows Capital and other cryptocurrencies get liquidated, it's going to lead to further liquidations in crypto and loss of assets for market makers, banks, hedge funds, prime brokers, which will lead us to a true mother of all short squeezes across equities like people have never seen before in the history of the stock market. Any questions? Empyrean, thank you. Thank you for your support of the think tank. You're too kind, my friend. We do everything we can to try to bring accurate information, but please remember to do your own due diligence. If you didn't understand what we're talking about, by all means, go check it out and look further into it. There's no reason that you should take our word for it. For those of you unaware, oil during the 2008-2009 financial crisis went into negative prices. In 2009, barrel of oil was selling for negative $38 a barrel. Natural gas today dropped 16.5%. That's the biggest one-day percentage drop in the price of natural gas since the fall of 2003. Remember, everybody, we saw Tyborn Capital. We've seen Melvin Capital, Archegos. We have seen so many different companies and hedge funds already losing their shit. White Square Capital, Anchorage Capital. And it's just going to continue. Moving on to supply and demand, the rate of shipping containers has fallen around 39% year over year. And it is currently at 7,600 and it is going to continue to draw down even further. Shanghai lockdowns may be over, but China's playing hardball with the United States of America. Nord Stream 1 pipeline has been shut down since July. It will be shut down for maintenance on July 11th, but Putin already cut that gas flow anyway. The maintenance will be a permanent shutdown, and this will be an absolute shutdown and recession for Europe. These are the daily flows of Russian natural gas through pipelines to Western and Central Europe per day. Blue is the flows from Ukraine, to Ukraine, Nord Stream 1 flows, and Belarus flows to Europe. Flows are going down, but the price of oil is also going down because that's the same thing we saw in 2008, 2009. Demand destruction will play a role here. But we're not going to see a recession. We're going to see it. We're already in a recession. You're going to see a depression hitting very soon. U.S. consumer spending, month over month, actual 0.2%. Forecast was 0.4%. Previous was 0.9%. Consumers are not spending because they don't have any fucking money. Moving on to meme stocks. Check this out. BBIG, excuse me, sorry about that, has increased the cost to borrow by 39.97% to 199.6 with 100% utilization and a 5.5% increase in days to cover. BBIG's price is down, but the cost to borrow is up, and the current short interest is also up. Free float percentage on loan is up to 32.75%, up 7.66%. Shares on loan is up 7.66% to 57.7 million on BBIG. Estimated short interest is up 12.31% from 7 days ago to 22.31%. $199.6% cost to borrow, and Fintel data shows us that is now up to 220.85%. There are 0 shares available. BBIG's and Tide's price may be down, but last week was the second largest shorted week dollar-wise in the history of the United States stock market, for the exception of 1 week in 2008. 9 out of the last 10 of the heaviest shorted weeks were in the stock market were in 2008. Now we just saw an all-time high this year.
So they're digging a bigger hole.
Bingo. All they're doing is digging a bigger hole to the tune of, what was that, $23 trillion, did I say earlier, in derivatives in 1 quarter alone for JP Morgan? I'm sorry, it was 18 trillion for JP Morgan, 23 trillion for the other banks combined. That's all. Just 23 trillion. No big deal, right? We just say these numbers so nonchalant, like you don't realize there's 4 fucking commas and like a shitload of zeros at the end. Topshine Global has filed a wind-up petition against Evergrande in Hong Kong because Evergrande has not honored their financial obligations of hundreds of millions of dollars. Dr. Marco Metzler of DMSA has filed in the Cayman Islands a wind-up petition against Evergrande as well. And at any moment, when the Cayman Islands rules that Evergrande needs to is officially bankrupt, let's just say it's going to cause a complete collapse of bond markets worldwide, in my opinion. Another defaulting real estate developer is requesting their ratings to be withdrawn to prevent the public from knowing that they're completely insolvent. Powerlong has been downgraded to CCC Plus and put on credit watch negative. The issuer has requested their ratings to be withdrawn. Just like Evergrande and Country Garden and all these other 100+ developers that are going completely fucking bankrupt. The Fifth Circuit Court of the United States, the Supreme Court, filed a lawsuit against the SEC stating that their use of administrative proceedings is unconstitutional because it violates the right to a jury trial. The Fifth Circuit Supreme Court departed from long-standing precedent and threatens to upend decades of SEC regulatory action. And you know what? I hope it fucking happens. I hope the court takes these extraordinary steps of finding that Congress had improperly delegated its legislative power to the SEC. The SEC should not have this fucking power. Bring it back to the fucking courts. Let a real judge and trial of people like you and I decide when the criminality happens. The court held that Congress offered no guidance whatsoever, which was therefore an unconstitutional delegation of its authority. Congress has unconstitutionally given SEC the power to glance over everything at their will. And when they do issue fines, who gets that money? The United States Treasury. Zero mainstream media coverage. That's why we're discussing it on this channel. Share it with your friends and family. Clip it, put it on Reddit, put it on Twitter, Instagram, TikTok. I don't give a fuck. Ladies and gentlemen, it's the end of the world as we know it, and I feel fine.
And Bitcoin is at 18,665.
Bitcoin is at 18,665. This crypto and stock market meltdown is just getting started, my friends. Just fucking getting started. You're seeing riots around the world.
Yeah, wait for the fuel and food rates.
What was that, Cash? Sorry.
Wait for the food and fuel rates.
That's what I'm showing on my screen right now. Farmers, all the Dutch farmers are completely shutting down all the highways. They're protesting because politicians decided to close many, many dozens of farms. There's mad standoffs. My apologies, everybody. Let me turn that shit down. I had no idea how loud that was going to be.
Oh, what are the farmers doing? Oh, they're just shooting the shit.
That's funny.
Farmers are shooting the shit at the police and politicians. They're literally showering them in feces in protest. What happens when farms and cattle ranches get shut down? What happens when food gets taken away? Go ahead, Cash.
You will be able to get a cheeseburger.
Always looking on the bright side. I fucking love it. This is the capital of Italy. This is what you see when you arrive in Italy.
Oh, que bella.
When are people in America going to stand up and say, I've had enough? When are people going to say, I've been taxed to death? When are we... Meanwhile, European politicians are fucking singing and dancing. Not a worry in the world. Fucking disgusting. Fucking disgusting. Not a care in the world. Italian women rummaging through leftovers in the market in search of food because they can't make ends meet. Because of Russian sanctions, or should I say Italian sanctions on Russia that have done nothing but destroy the European Union. These are people's moms and grandmas, daughters, wives. Come on. But you know why we're seeing this? Because the World Economic Forum is doing things that you wouldn't even believe. The United States is doing, and European Union, the central banks are playing their little NATO games. This isn't support for Putin. This is looking at the realities of what's happening around us. Iran and Argentina just filed a request to join the BRICS nations because they understand the things that are happening with the United States, NATO, and the European Central Union and central banks. This is going to be the last video. It's about 6 minutes. If you can, since it's in Russian, you do have to read the subtitles, but I'll let you read them. But I'm going to leave it at this. This is going to be the last thing I show for today.
Демократического многополярного порядка, основанного на принципах равноправия, справедливости и уважения друг друга. За то, чтобы мировая торговля и финансы были свободны от барьеров и политически мотивированных ограничений. Хотел бы особо отметить, что актуальность взаимодействия с партнерами, разделяющими наши ценности, резко возросла в нынешних условиях разбалансировки международных отношений. Эта ситуация назревала давно и стала неизбежным итогом линии сторонников так называемого либерального миропорядка на размывание международного права, подрыв многосторонних институтов. В интересах своего сохранения своего доминирования некоторые страны последовательно стремятся подменить действующую глобальную архитектуру, опирающуюся на центральную роль ООН, неким порядком, основанным на правилах. Каких правилах, кто эти правила придумал, непонятно. Но попытки сдержать развитие государств, не готовых жить по таким придуманным кем-то правилам, безрассудное применение нелегитимных санкционных инструментов, помноженное на последствия пандемии коронавируса, все это лишь обострило кризисное явление в мировой экономике. Глобальная торговля погрязла в спорах, при разрешении которых все меньше учитываются нормы и принципы ВТО. Вот здесь коллеги вспоминали сейчас про ВТО, но мы же знаем, как развивалась ситуация в рамках этой организации последний год. Расшатывается вся международная валютно-финансовая система. Рвутся производственные, логистические и инвестиционные цепочки. Серьезный социально-экономический эффект, особенно для развития государств Азии, Африки, Латинской Америки и Ближнего Востока, имеет стремительный рост цен на продовольствие, энергоносители и сырьевые товары. И хотел бы еще раз подчеркнуть, уважаемые коллеги и друзья, это не итог последних месяцев и уж тем более не следствие специальной военной операции, которую Россия проводит по защите Донбасса. Хочу подчеркнуть.
You know what? I'll say this in English. All right, I'll translate for this fucking prick. He said, I would like to stress again, this is not a consequence of Russia's special military operation to protect Donbas. Once again, this jump in inflation did not happen yesterday. It has been happening over the past several years. As a result of the long-term, and I want to stress this, irresponsible macroeconomic policy of the G7 countries, uncontrolled money creation, and accumulated unsecured debts. This process was accelerated by the pandemic when both the supply and demand for goods and services dropped on a global scale. The food market has been disrupted most severely. I said this at a recent St. Petersburg International Economic Forum. And I want to say it again. They printed money, distributed it in their wealthy countries, and, like a vacuum cleaner, started scooping up all the food from the global market. Only recently the United States was a food exporter, a net exporter. But now I think their imports are about 17 billion US dollars more than their exports. This is a dismal indicator for food markets around the world. Meanwhile, the soaring cost of essential agricultural commodities, such as grain, has hit the developing countries and markets the hardest, as this is where bread and flour are vital for the survival of most of the population. I think it was French Queen Marie Antoinette who, looking over a crowd of starving citizens from her palace, reportedly said with indifference, "If they have no bread, let them eat cake." And she did in fact say that. She said, if they have no brioche, let them eat cake. Because this is the same.
Yes, they say, let them sweat my sister.
This is the same cynicism that certain Western countries are now showing by destabilizing the global production of agricultural products and dealing with this matter by restricting, for example, supplies of Russian and Belarusian fertilizers and impeding exports of Russian grain to world markets. Speaking of which, we're expecting a good harvest. God willing, everything will be fine. And if we supply 37 million tons of grain to the world market this year, we would most likely be able to supply 50 million tons of grain. However, it is becoming more difficult to ensure the transport that carries grain, bulk carriers, and transactions under trade contracts, and so on. At the same time, they're artificially fueling hysterics over, say, the suspension of Ukrainian grain shipments via Black Sea ports. Meanwhile, according to American and our estimates, this is about 5 or 6 million tons of wheat plus 7 million tons of corn. This is something, but it does not resolve the problems in the world grain market. I would say 5 or 6 million, me personally, is not going to resolve the problems in the world's grain market. Now, Putin says, but that's not even the point. I've said publicly many times and want to emphasize again that Russia is not preventing the export of Ukraine's grain from its territory. We are ready to ensure safe passage of grain ships via international waters if, of course, the Ukrainian military demines the ports in nearby waters. In addition, we have a relevant understanding with representatives of the UN Secretariat. As before, we lack one thing, a constructive approach from the current Kiev authorities. I would like to emphasize that Russia is a major and responsible participant in the world food market. We are certainly willing to continue fulfilling our contractual obligations on the supply of agricultural products, fertilizer, energy, and other critical commodities in good faith. I would like to note that Russia continues rendering humanitarian aid to many countries that need it. As a matter of fact, Uruguay, for those of you that are unaware, Russia recently delivered foodstuffs to Lebanon, Tajikistan, Kyrgyzstan, Cuba, Sudan, and others without cost. Colleagues, I would like to note again that we have every opportunity to build up practical cooperation between the BRICS countries and its partners, the countries represented here. We feel your mutual interest in maintaining close business contacts. It is equally important for BRICS to expand cooperation with regional associations like ASEAN, the African Union, the Association of Caribbean States, Gulf Cooperation Council, and the Indian Ocean Rim Association. Of course, serious potential is opening up for cooperation between our states in the context of working in the integration processes between the Eurasian Economic Union and China's huge One Belt, One Road infrastructure and trade project. In general, we are convinced that many serious problems on the global agenda can and must be resolved only by pooling efforts, and this summit is an example of constructive work in this respect. I don't know what you got from that, but it seems very clear that many countries are willing to, quote, replace the existing global architecture that relies on the central role of the United Nations with a rules-based order. And why is that? Because NATO inflicts peace by force. NATO inflicts peace by force with no justification whatsoever.
Compensation now to the SWIFT system and the IMF.
Yep. It's nothing but competition. And at the same time, the European Central Bank is doing nothing more than playing hot potato. The European Central Bank is going to backstop bonds by using other bonds in the way that it did with Greece a few years ago. It's a magnificent crash waiting to happen, both in Europe and in the United States. The European Central Bank is going to buy bonds from Italy, Spain, Portugal, and Greece, and use some of the proceeds from German, French, and Dutch debt in a bid to cap spreads between their borrowing costs. The central bank has divided the Eurozone's 19 countries into three groups, basically: donors, recipients, and neutrals. Based on the size and spread of a rise in the bonds and the bond spreads in the last few weeks, the spreads are gauged against German bonds, which serve as like a benchmark for the single currency area. In short, the European Central Bank is going to buy worthless bonds with money from maturing viable bonds, those of Germany, the Netherlands, and France, which is clearly not quantitative tapering, and proves that only by explicitly buying bonds will the ECB prevent a complete collapse of Italian bonds in the bond market. And that's exactly what they're doing, even if it means they can't claim that they're pursuing quantitative tightening. They're going to kick off this rebalancing on Friday to prevent financial fragmentation from the Eurozone countries from getting in the way of their plans to raise interest rates. And they're going to have another scheme unveiled next month. What a fucking joke. The Atlanta Fed has completely slashed GDP estimates. Now, everybody, I've been discussing this with you since July of 2021 and letting you know that all of the estimates made by the Atlanta Fed have been for many years, for decades and decades and decades in this country, overestimated for the future. And only when necessary do they actually come out and tell us what the actual consensus will be for the near term. This shows you that the blue chip consensus, which is FANGMAT stocks, Facebook, Apple, Amazon, Netflix, Google, etc., Meta, you get the point, are extremely overvalued. The top 10 and bottom 10 average forecasts of blue chip consensus are not pricing in the actuality of a recession yet. A lot of this is due to the fact that they cannot. When these FANGMAT stocks lose value,
no, they overvalued, but this we hypothecated as well.
and they have no actual ability to bring down the value of these equities without forcing themselves into a margin call situation. It's really an amazing conundrum. The Atlanta Fed has now slashed its forecast for second quarter GDP growth from 0 to -1%, meaning the U.S. is now right on the verge of a technical recession after the first quarter's confirmed contraction yesterday. What a fucking joke. In short, the United States consumer is getting wiped out. Absolutely wiped out. This is the Citibank economic surprise chart. And this is an indication of the Atlanta Fed GDP forecast compared to the University of Michigan expected changes in pricing during the next year. prices are going to continue to go up. Meanwhile, the GDP and jobs and economy continues to go down. This, my friends, is stagflation. Stagnation of the economy, meanwhile, inflation of the price of goods, even while the economy is tanking. This is a worst case scenario. Worst case scenario. Depression is imminent. I apologize. The 10-year yield, bond yields, have tumbled back below 3%. Let me get my face out of the screen so you can see this. Holy shit. Recession fears have sent the 10-year yield back below 3% for the first time since June 10th's CPI print. Interestingly, rate hike expectations continue to fade, and the subsequent rate cut expectations are rising. Check it out. You can see that here. But for now, it appears that Jerome Powell is more worried about the stock market than the Fed is worried about driving us into a recession. Initial jobless claims have hit a 5-month high as layoffs accelerated, as I stated earlier. 231,000 Americans. 231,000 Americans filed for unemployment. That's the red line. Jobless claims were obviously, as you can see, going down and now have increased. The green line is continuous jobless claims, and these are initial jobless claims. Deutsche Bank has also noted that continuing claims are the best recession indicators. Companies including Netflix and Tesla, as we discussed, have laid off hundreds of employees in recent weeks. And this reflects large increases in states like New Jersey and Massachusetts, while jobless application claims in Texas and Georgia have declined. I think that should tell you a lot about where the jobs are and where they're not. This is the United States Personal Consumption Expenditures Chain Price Index in red, and the Core Price Index in blue. This was basically the headline from this morning's, from the Fed's favorite inflation indicator from this morning. The core PCE deflator printed lower than expected at 4.7% year over year versus 4.9% expected. The headline May PCE printed plus 6.3%, which was the same as April. However, this is May data, and gas prices have soared in June because this is a lagging indicator. This stuff's a month behind. Americans' pace of spending slowed significantly reduced spending in May, which was half of the expected spending, while incomes rose just as much as expected, which is still nothing when you compare the real double-digit inflation numbers. American spending rose slower than incomes for the first time since December, But when you adjust for inflation, spending actually dropped 0.4% month over month in May. Remember, we're finishing up June now. Therefore, spending rose slower because Americans had less to spend and their credit cards are maxed out. We have Americans on all-time high credit card debt as a nation right now. Private wage growth slowed year over year to the lowest since December of 2021, while government wage rose 5.8% year over year, but that's still not enough for the 8.9% year over year inflation. Income grew at 5.3, but spending rose at 8.5, and inflation is up 8.9%. Unsustainable. Your fucking raise is doing nothing for you. The red line is expenses. The green line is income. See how simple? This, ladies and gentlemen, is the black swan. And we don't know what form it's actually going to take when it arrives. But it will hit fast and it will hit hard. You want to see the personal savings? Proof Americans have no fucking money? Here's the personal savings rate. The amount of people are able to save is now as low as it was. Oh, look at that. 2009. The Bureau of Economic Analysis revised historical data, which lifted April's savings rate from 4.4 to 5.2%, and May's print uptick to 5.4, the highest since February, which is at the highest that it's been since 2009. We are just beginning to see inflation and recession rear its ugly head. And the S&P 500 is seeing its worst first half since 1970. The NASDAQ 100 is the worst half since 2002, the height of the dot-com bubble bust. And Europe's markets have seen the worst since 2008, at the height of the global financial crisis. And ladies and gentlemen, you ain't seen nothing yet. I think that's about enough negativity for one day. I will say that if we're lucky, you'll be properly hedged. And I won't tell anybody what to do, but for me, I think for me, the way to properly hedge is through my favorite meme stocks that are owned by retail investors that are bound for an inevitable squeeze, in my non-financial opinion, advisor opinion, I should say. And a lot of precious metals that are extremely suppressed and overvalued. I love my call options. My call contracts on my meme stocks are probably one of my favorite hedges. Because this economic surprise is bound for a market crash. And when it happens, heavily shorted stocks will squeeze, just like it has in the past. On that note, I'm going to get filthy fucking rich or die buying. We're going to be so fucking rich. Have a great fucking day, everybody.
Get the printer out.
Get the fucking money printer out. We're going to be so motherfucking rich. Holy shit.
Something fucking rich.
And I'll wait as long as it fucking takes.
Yeah, I've got something to say to the YouTube chat.
Please do.
Smash the like button.
Smash the like, please. 5 times over. We're the fucking whale. We are the whale. Don't
Well, that's
forget
the
it.
thing when people talk about VW, they keep saying, oh, it's different, it's different. It is. Of course it is. But in some ways, I think it's stronger because you're dealing with people, say the majority, haven't had it. But I don't know any billionaires that have been buying shares.
Well,
you know what's wild? Wolfie, the Porsche settled with the government in 2008 and said, all right, that's enough.
Yeah.
That was one whale. We are the mother of all whales.
Yeah, there's no settling with us. There's no settling with us.
Yeah,
we're the board, man. You cannot reason with us. You know what I'm saying?
Exactly.
We're going to assimilate you.
No matter how much they offer, there's going to be people saying, fuck that, I want double, triple, 5 times that amount. No matter what they offer.
100.
They could offer 100 grand a share, and I guarantee you 40% of the people would be like, fuck you, I want 500 grand a share, you know? It's GameStop. I want 2 million a share.
I want Wall Street to get turned upside down, and I want to see a bunch of motherfuckers who are literally evil end up on the fucking street. You know.
Same.
I can't wait for fucking Biden to get on TV and stutter away and say, all right, there's enough of this. Gary Gensler and then the Fed. It's gonna be phenomenal. This is great. I love it.
They might try to sweep it under the rug. They might just try to sweep it under the rug and be like, oh, all these hedge funds fucked us. Let's never talk about this again. You know, and that's it. So.
But that's why I love the fact that it's between 5 and 10 million people, because the eyes are on this. You know, the noise has been made, and when it comes out, you're gonna have 5-10 million burries that have all got a tale to tell, and you know, there's gonna be serious questions asked to the regulatory bodies. What the hell happened after 2008, and why didn't you put the rule changes in 2012? And what do you mean the only thing you did of any essence was an SSR rule and then made market makers exempt? You know, they're going to be serious questions. But then they got on the other side, they got a massive transfer of wealth to people that are going to have the time and be open to be able to say what they did, what their role was, what their part was. And then I'm hoping that's the big thing for me is change. 5-10 million people suddenly come into a serious amount of money, if that's how it ends up, because no financial advice. But if it works the way, you know, those who have, for the reasons they have, expect, you know, I'm hoping that's going to really change. And when I look at the SEC rule changes, etc., that's what actually gives me even more. I know, you know, a lot of people are down because it took so long and this, that and the other. I'm not really seeing it, but that's background. That DOJ announcement was massive. I think that's why people get nervous when people start saying, oh, it's going to. And we've had, you know, I flagged it up, not that it got picked up on, but, you know, we've got real smart people that have been looking at this, real smart apes and DD done, etc. What if they was all meant to be correct? What if they were all correct, but because of everything going on in the background with the manipulation and the tricks and the market exempts and with all that going on, which is now known, I never knew none of this a year ago, 18 months ago. I never knew about market exempt. I didn't know they could do a naked share without.
Tell me in the comments. Tell me in the live chat right now.
And they're going to be serious.
Are you fucking fatigued?
That's not liquidity. You know, there's court cases, there's a paper trail.
I'm not fucking tired.
This stuff. None of this is new. And when it comes out, it's blown wide open.
I'm not fucking.
You know, UK was told
$30.
Yeah,
has arrived.
I ain't missed.
Go ahead, brother. You were making a great point. Keep going, brother.
Go ahead.
$77 run.
Yeah, sorry, I just got cut off, and then
it's coming again soon, ladies and gentlemen.
I sort of lost trail, but it's that paper trail which is the aftermath of us hitting a home run, where we would have done money, and yet we've been here. You know, 2008 woke a lot of people up, but a lot of people still don't know the truth behind that. They've all watched The Big Short, etc., but they still don't know the truth. They just see it as it's what happens in the market. This time round, and we've been told by all MSMs, you know, the Gasparinos and the, you know, I don't even like mentioning their names and give them airtime, but hold them responsible afterwards, because you're going to have all these experts that are on the telly getting paid hundreds of thousands of nice suits, talking down to us like we're all idiots, and insinuating everyone's like 16, 18, living at home with their mum, you know, never had to live in the real world. But come on now. This is people, these are the same people that the rules and the 1%ers and the stock market has ripped from your 401ks and lied to us. You know, this is blatant lies, this is theft, this isn't just the market and how it works. You know, dumb money loses money. Well, if you listen to the experts, everyone who bought AMC and only AMC has made a shit ton more than any of them experts have. And yet we're still held out as the ones that are the idiots. And when they want to talk and they want to go on and do their interviews, start talking about the real stuff. Because if you don't, afterwards you're going to have no credibility, because everyone's going to say, we told you, we told you, we told you. And you kept telling everyone not to put us off, because we was already in it, proved we weren't leaving, proved we weren't going nowhere. You came on MSN to tell everybody else whose money you had, every other investor, everybody who had a 401 and never invested in the market or a share or Apple, who lost their pension now, not because of us, we're the cure, not the cause. You told them that we were wrong and you were right. You told them we were dumb money, and you told them to go and buy Apple because it's going to hit a $3 trillion market, and it tanked. And they're the same people you did it to in 2008. My mum and dad, working 18 hours a day to pay a 17% mortgage because of some greedy bank that we had to bail out afterwards, that we had to have austerity afterwards, we had to suffer afterwards, so that they carried on getting richer and nothing changed. Damn!
What happened to your investments? Put it in the chat right now.
now.
What happened to your fucking investments in 401ks?
Yeah, that's exactly
2008. What happened to your house?
Goddamn
It's
right,
like, drop it right now,
Nothing
quick.
fucking
Tell me
changed.
what happened.
We lost our fucking pensions, 401ks, life savings, our homes, our cars, everything, our jobs. And then we had to give them billions of dollars in fucking bailouts. Fuck these banks. It's our fucking time. $30 fucking. Let's keep it fucking going.
That's right.
Wolfie,
That's
people are
right.
loving it, dude. Everyone feels that shit, dude. 100%, brother. Everyone is giving you so much props, man. You are fucking on point. Everybody knows it, man. No matter what the mainstream media wants to tell others, what they want to preach, I don't give a fuck if CNBC is owned by Citadel. I don't give a fuck that Pfizer owns CNN. We know what's really going on here. So thank you very much for that, brother. By all means.
Appreciate you, brother.
No worries, man. We've got to
Yeah,
speak up for the millions that ain't here now. Don't forget, there's people gone from that. That 2008 hurt a lot of innocent people. And you'll be walking around. I do it every day. I've done it every day since January when I bought in. This was my chance to pay them back. But I walk around and it's like you see the scenes in some of the films when they're driving around in a car. I can't think what the margin called, the film. When he's driving around in that car and he's got the young lad next to him and the young lad's attitude is, I don't give a shit, you know, until he realises he's even going to be paid. But they're looking out the window and they're looking at all the people that just do not know. So if you're going to do things in your community, A1, top of my list, family, A2, top of my list, make sure you get that word out amongst the people you've got, because they call you stupid at day. Look at Burry, he's been wrong more times than he's right, but everyone holds him up as an expert. He sees something that we all see. You know, DFE started this ball rolling in GME, that's going to do its thing as well. You know, all this infighting and stuff, that has to stop, because it's me, you against them, it's not me against you. I mean, how does that work? They want it, we got all the bots arguing with bots and we all jump in on it. No. Start talking about the people that were hurt, the people that have been forgotten. Go and have a look at the Wall Street Conspiracy, the film that they pulled 5 minutes before it's due to air in America. Go and have a look at Darren Saunders walking around with the placards on. That man died fighting what we're fighting today. You know, there's good people that ain't here today. We need to remember them and we need to be loud after this. It's not because we're rich, not because we're arrogant bastards that turned into the people that we're fighting against, but because we care and we want change. We want these fuckers held accountable. Running around in their planes when we can't even go out, can't even visit our mums. Come on now. Change. We need change.
Fuck, man, I will vote for you. Just fucking run.
Wolfie for president.
Bro, for real.
Prime Minister, everything.
Now I'm going to $1 million.
Diamond fucking hands. I'm gonna get rich or die buying.